This is Business Weekend with Ross Greenwood.
Hi there, and thanks for being with us here on Business Weekend. I'm Ross Greenwood. Coming up on the program today, as market volatility hits a peak with soaring inflation and a serious risk of a global recession, the government hands down its first budget in less than 2 weeks' time. We'll hear from one of the people framing that budget, Finance Minister Katy Gallagher.
We want to work alongside monetary policy to make sure that the decisions we're taking in this budget, are based on the economic circumstances of the time.
And on inflation, the grave danger now is it's more than just petrol and electricity prices. If that's the case, higher interest rates could be here for longer. Edward Boyd went out in search of the key sticking points. Plus, after 20 years with the voting power, the baby boomers are being outnumbered by the millennials aged in their 30s and 40s. That is going to reshape politics and the battle between the generations. Plus, on the program, the director of Moulin Rouge and the latest Elvis movie, Baz Luhrmann, is on the program. He's talking business and the creative arts.
The first question I ask is, what do I want my life to be like, my actual life? And I tailor my creative decisions and adventures to what I want my life to be like.
Let's start the program there by trying to work out the future of the economy, interest rates and inflation. This week, there's more evidence the global economy is teetering on the brink of recession as central banks try and head off inflation with higher interest rates. Now it's a matter of judgment about which is worse, a recession or long-term inflation. As in America, in Australia, there are signs that inflation is more than just a passing trend. It's coming as companies raise their prices to not only offset their costs, but to profit from cash-rich consumers. Edward Boyd reports.
Everywhere you seem to look, consumer prices are rising. Red meat, vegetables, petrol, electricity, household gas. One of the worst, airfares. Airlines are charging massively inflated prices, but it hasn't stopped consumer demand. The planes are full, and it's a warning sign that inflation might not disappear as quickly as the Reserve Bank hopes.
I suspect that they're going up in the order of 20-30% on the basis of the imbalance between demand and supply, in addition to the fact that unit costs of airlines have gone up tremendously over the past year.
Qantas this week said it's expecting a pre-tax profit of up to $1.3 billion this half year. It's a remarkable turnaround for an airline that's lost $7 billion since the start of the pandemic. And this quite amazing turnaround is mainly due to sharply higher ticket prices.
C factors in particular are extremely high. That's the big factor that we're seeing across the board. And you are seeing some increase in international airfares. I think it's happening worldwide because there is this lack of capacity that's out there. And the airfares have to be up because we're seeing fuel this quarter is 76% higher than it was pre-COVID. And as you know, it's still very volatile, so we have to recover that.
There is one sector, though, where prices are starting to ease: second-hand cars. A new report from Moody's shows car prices are on the way down again, and it follows the trend in America.
Yeah, so we've seen second-hand vehicle sales fall across the last 4 months in Australia. So it's actually about 10% below its peak in May earlier this year. It's still too early to say, you've got a bargain, go out, buy yourself a second-hand car. But it is a really good sign that we're starting to see a normalisation come into a market that's just been so disrupted over the last couple of years.
The fall in car prices comes with an easing of supply chain pressure, plus an increase in the supply of new vehicles.
Yeah, so much of what's driving the falls that we've seen in the used car and used truck market is actually what's happening because of the new car sales. So we've seen that semiconductor shortage just throw spanners into global production over the last few years. That's starting to normalise. We're starting to see some easing of those pressures. That's allowing that global car manufacturing to ramp up. When people buy a new car, they sell their old one. That's adding to supply for used cars and finally able to meet some of that excess demand that's been there for a while.
Car prices coming down is a sign of deflation, something the Reserve Bank and the government desperately wants to see.
The global economy is treading an increasingly narrow and perilous path. That is one of the key messages from meetings that we've had through the course of yesterday and this morning as well. The number one enemy when it comes to the global economy is inflation. We've seen some very troubling outcomes for inflation in the United States released this morning, the highest core inflation in something like 40 years.
Late this week, though, it was confirmed that consumer prices in the US stubbornly refused to fall. Headline inflation is at 40-year highs, 8.2%. Core inflation, which strips out volatile food and energy prices, jumped to 6.6%, its highest level since 1982. It means the US Federal Reserve has more work to do lifting interest rates, something that was echoed by the head of the International Monetary Fund.
We know that rising interest rates come at some cost to growth, but we also know that not tightening enough to put a leash on inflation would mean interest rates staying higher for longer, resulting in even more harm to growth and to people.
And it's a similar story for Australia. But the fact is, despite the RBA raising rates by 2.5% this year, Aussies are yet to tighten up their spending. Retail spending keeps setting fresh records, and a lot of that money is being spent on overseas holidays.
People are chomping at the bit to travel again, so we're seeing very, very strong outbound travel demand, in response to, coming out of COVID. Once that wears off, once that strong incentive and desire to travel has worn off, I think that in 6 to 12 months' time, once it has worn off, what you'll see is people will start to travelling in a more uniform or normal state, and that's when you'll see them respond strongly to higher airfares.
Qantas says domestic capacity is at 94% in this current half year, while international capacity is coming back more slowly. It's currently at 61% and should reach 82% by June next year.
Inflation and interest rates haven't made a dent in people's need or desire to travel. And the research shows it's a category consumers will prioritise ahead of others. That's not to say things won't soften in the future, but based on our forward booking trends, demand keeps on strengthening.
Chatswood Toyota is one of Sydney's largest motor dealerships, selling new and used vehicles, and customers are willing to pay a pretty penny.
Well, to be honest with you, used car prices are remaining pretty strong. In advance of this interview, I rang 3 or 4 dealers in town, and they all said pretty much that the vehicles that are like high maintenance vehicles to run or vehicles that aren't in good condition, they're the ones that have taken a bit of a hit, but good quality cars dealers are paying top dollar for.
The impact of interest rates is slowly trickling into the used car market, but it's taking time.
It has softened a little because of the interest rate rises, but I think other than that, the market's still very strong. Look, a couple of dealers did report that it's, probably off 10 or 15%, but, we haven't found that here. It's still very, very strong.
And this softening in sales is something automotive pricing experts Glasses are seeing too. But it comes after sharp price increases for more than 2 years.
Look, we've seen some extraordinary price increases on certain vehicles, some over 50%, and some 3-year-old cars were selling about 30 or 40% above their original new car price. So, it's been an extraordinary time in the market. I've been in this industry for more than 20 years, and we've never seen anything like what we've seen in the last 12 months.
Used car prices are expected to keep falling, but it will take a while.
Look, I think it's going to take at least a couple of years, Ed. I don't see it them falling off a cliff at any time soon. I would still be very confident about buying a used car over the next 6 to 12 months as supply constraints still there. I don't expect that they'll fall off a cliff at all. Having said that, if we enter into a recession or if interest rate rises continue to occur, then that will put pressure on prices as well.
And it's the same story at Moody's Analytics, prices to gradually fall as the market starts to normalise.
We expect it to keep falling, and that largely comes back to that new car sales and production ramping up. So we should see prices fall through the rest of this year. What'll be interesting to see, though, is how that differs between cars. Given where oil prices are at the moment, we've had that shock. We're starting to see some signs that it might be starting to lift again. we could see people move more towards those smaller cars, more of those energy efficient cars, and that'll come at the expense of those big gas guzzlers, SUVs, four-wheel drives, that type of thing.
Toyota's still experiencing high demand for SUVs, and it can take a while for a new car to be delivered to the customer.
Well, look, I'm a Toyota dealer, so, Toyota's number one in the marketplace, so most of our models, in fact, all of our models are in high demand. But you could safely say that, vehicles like SUVs and four-wheel drive, they're still commanding pretty strong prices, when we're purchasing or trading them.
But as for airfares, expect to be paying high prices for at least the next 8 months.
I'd say at least 8 to 12 months. You've also got interest rates in the mix as well, putting downward pressure on airline demand. And I agree with you, once people have got that first trip post-COVID out of the way, and then they start making decisions in a more normalised world where you've got very strong inflationary pressures, you've got low wage growth, you've got a very, very weak Aussie dollar, which is putting up the price of goods and services when they arrive overseas. All of those things combined will lead to a reduction in air travel in 6 to 12 months.
The government here is awash with cash, at least in the short term. So what does that mean for the choices it now makes? Deloitte Access Economics is one of Australia's most highly regarded economic forecasters. And earlier this week, I spoke with Stephen Smith, its chief economist.
There's been an astonishing turnaround in the budget balance from the lows during the pandemic. But the budget's in a very odd position. On the one hand, there are some challenges. On the other hand, it's the envy of most governments around the world. And we think that means it's a bit of a tricky balancing act for the Treasurer on budget night.
OK, you talk about a tricky balancing act because he's talking tough, warning people of tough times coming and warning that really sort of the money that's coming through the door right now can't be guaranteed, which is true. But the fact of the matter is he's in rude health as compared with where he otherwise thought he might have been before the election.
Well, we think he's going to be announcing some big increases in revenue. That's true. About 114 billion worth over the next 4 years, about 80 billion or so thanks to additional company tax receipts. That's due to higher commodity prices, of course. But he'll also be talking about higher spending. Spending also expected to be revised upwards in this budget, and so a structural budget deficit, which requires more attention.
OK, so we're just having a look here at the underlying cash balance to GDP, which shows that at its worst during the pandemic, it got down to -6%, now to -2%. Now, sure, the government is still losing money technically, adding to the debt, the $1 trillion debt that he keeps on talking about. But as I point out, they're now much closer to getting back to a balanced budget than what ever could have been imagined.
That's absolutely right. As I said, the budget balance has improved dramatically from the depths during the pandemic. But in a lot of ways, that's the easy part. The heavy lifting is still to come. So we've been through this period, particularly in the last 12 months, where three things in particular have gone well for the budget. The first is very high commodity prices. The second is very low unemployment. And the third is high inflation. I don't think we'll hear the Treasurer speaking on budget night about inflation being good for the budget, but it absolutely is. The amount of money being spent around the Australian economy is higher. Taxes are a share of spending in one sense. And so, those three things are really helping the bottom line at the moment. But they won't continue to help the bottom line. And so it's a hard grind back to a balanced budget from here.
OK, so then a lot of talk has been about the stage 3 tax cuts. The government has committed to those, but we know that the government also collects more than half of its revenue from PAYG taxpayers. So the more people that they can get to stay in work, though it might be inflationary on one hand, it also helps them in terms of their long-term stable revenue.
That's right. The stage 3 tax cuts have been a big point of discussion over the last few weeks, as it looked like the Treasurer and the Prime Minister might be wobbling a little on an election commitment. We think that's missing the point somewhat. It shouldn't be a will they, won't they guessing game on election commitments, but there are important policy points to discuss here. You're absolutely right. Taxes on individuals raises close to half of all tax revenue for the federal government. Even with the Stage 3 tax cuts in place, that will continue to rise. Without the Stage 3 tax cuts going ahead, that share of federal tax revenue coming from taxes on individuals would get close to 52% in 25-26. That would be the highest level since before the GST was introduced in 2000. The budget definitely needs more revenue, but we don't think necessarily that individuals is where that should come from. Australia relies a lot on taxes on individuals and companies, and some broader measures across the budget should also help to do the heavy lifting.
And this is where we find out whether Jim Chalmers is the true reformer that he's wanted to paint himself as being, or whether he's a meat and potatoes treasurer who simply tries to either A, balance the budget, but the true reform is trying to change the tax mix away from individuals and to other forms, consumption taxes, to company taxes, these types of taxes which genuinely do, if you like, amount to real tax reform.
That's exactly right. We would be in favour of a change in the tax mix, which saw a slightly higher GST, which saw and some of that revenue flowing to the federal government, which saw taxing the very high profits of the Australian resources companies at a greater level than we currently do. We also think that there are very large tax expenditures in the budget. So the generous tax concessions, for example, that we provide property investors and people for their superannuation contributions and earnings, where there are that's costing billions of dollars to the federal budget, and so those things need to be looked at in terms of reform and this treasurer. We're still in pretty early days for this government. There's quite a long way to go until the next election, and these things aren't easy. That's why they haven't been touched for a long period of time. So, we're hopeful, and we think it's necessary.
Now, Stephen, we just brought up a chart there just a short time ago showing the actual increase in the company tax, the rolling 12 months. We've got it on here now, showing really that the rise of company tax out to June 22 up above $120 billion. Now, that's the windfall in many ways because of the resources boom, but also many companies have done really very well. The problem is if the country goes into recession because interest rates go too high, that company tax comes into jeopardy. That can't be guaranteed that the government will keep that tax year in, year out.
That's absolutely right. That is a cyclical benefit that the budget's receiving at the moment. The structural budget deficit, that is, after you take out the impact from lower than average unemployment, higher than average commodity prices, that's where the hard grind back to a budget surplus really sits. I should say as well, a recession is not our base case in Australia, although we do see the UK and Europe likely already in recession and the US headed that way as well. But Australia at this point we think will avoid a recession. The big risk that we see is that inflation hangs around a little bit longer than what we expect and what the RBA is hoping as well. And as you say, pushes interest rates higher. That has the potential to tip Australia into a downturn, and would certainly have an effect on the budget.
And this is why in this budget it's very important that the Treasurer, the government, don't spend money that they might presume is coming into the future, which might be money that disappears, i.e. company tax, resources, royalties, all that type of money, which can be, if you like, can come and go as compared with the money that they know, the underlying, money that's coming that you talk about. That's the key right now.
That's absolutely right, and I have to say, I think that the comments and the broader commentary from the Treasurer and the government have been along those lines to date as well. It remains to see on budget night, though. We're expecting some pruning of some wasteful spending, perhaps, and some modest changes. We're not expecting big policy announcements in this budget on the 25th of October. Rather, the government buying itself a little bit more time for some bigger announcements post-October and prior to the May budget.
Stephen Smith, partner with Deloitte Access Economics. Good to chat to you today. Many thanks for your time.
Thanks, Ross.
Against that backdrop, the government is framing its first federal budget, and it has lessons from the British government, which caused a market landslide by cutting taxes to stimulate its economy. At the same time, the Bank of England was raising interest rates to try and slow it. It shows the actions of government are closely watched and acted upon by the markets. Well, Finance Minister Katy Gallagher joins me now. Thanks for your time, Minister. What did you learn from that British experience where clearly the government's actions worsened its economic outlook?
Thanks, Ross, for having me on. Well, I think it confirmed the importance behind having fiscal and monetary policy working together. I mean, obviously, we've got some challenges across the economy, high inflation, rising interest rates, wages not keeping pace, real wage growth going backwards. So, there's some issues in the economy that we are mindful of. We want to work alongside monetary policy to make sure that the decisions we're taking in this budget, are based on the economic circumstances of the time and are in the right interests not only of the economy but the Australian people as well.
So broadly, if we define this, is it an austerity budget or is it a budget which is seeking to grow the Australian economy? Because one that seeks to grow the Australian economy, of course, could potentially stimulate more inflation.
Yeah, so our commitment is really, there's three main areas in this budget. There's implementing our election commitments, which we're focused on making a difference in cost of living, but cost of living which pays off with an economic dividend. It is looking at how we can manage some of the pressures that we're seeing and also dealing with waste and rorts across the budget. I would add the only other thing we're having to deal with to some degree is some of the previous governments, decisions or spending that they were doing that was ongoing but didn't have an ongoing provision in the budget. So we're dealing with some of those as well.
So give me an example of that, though.
Not contributing to.
Yeah, give me an example of that. What's an example of that?
Well, look, for example, there's 200 health programs that we've come across during our audit of spending that we've been doing across the government where, provision was made for 1 or 2 years, but not in an ongoing sense. So there's some IT projects. I can give you one in Treasury, modernising business registers that doesn't have enough funding to go forward, so it's only partly paid for. Those types of things, which we're having to, come and pick up the other side of. We need to go forward with those programs, obviously, but they have a fiscal impact. So that's certainly been part of the work that we've been doing since coming into government. But we're very mindful of not adding to inflationary pressures, which is why our investments in skills, in childcare, they are about helping people with cost of living relief, but not contributing to inflation and paying off with an economic dividend down the track.
OK, so there's one issue that came up this week, and that was the boss of Alinta Energy talking about increases in electricity bills of 35%. That's only in Victoria. In other states, it could be even higher next year. So how do you therefore give cost of living relief in that area without also stoking inflation?
Well, I think what we're seeing in the energy markets, in electricity, we've been dealing with this in gas since we came into government too, is getting on with the commitments we've made about the energy transition. Like that's the transformation that's occurring across the economy becomes even more important with the circumstances we face. So, look, some of these rising pressures or price increases are occurring because of the situation with Russia and Ukraine. There's obviously some domestic issues here after, a decade of failure to deliver an energy policy, and we're suffering from that. So certainly from our point of view, and this is hard work and the government is absolutely focused on it, we know these costs are hitting households, but that rewiring the nation, powering the regions, our Powering Australia plan becomes even more urgent. So we're absolutely committed to being a part of that, to working in partnership with business, because we can't do it on our own, to make sure we're seizing the opportunities that come with this and where we can, putting those downward pressure on energy prices going forward.
But no direct relief for low-income households, middle-income households who might suffer as a result of a 35% increase in electricity prices?
Well, Ross, this is a matter that is getting a lot of focus across government. So what is happening in the energy sector, whether it be electricity, renewables, whether it be through gas, and some of the price increases we're seeing there. So there's no doubt there is more work to be done here, and we are taking the advice of experts about how we manage some of these challenges, absolutely, and we are extremely mindful of the pressure on households. But in this budget, as I said, it's about implementing some of our election commitments and getting, in relation to energy, getting started on the Powering Australia plan, which is really about making sure our energy systems are up to standard after a wasted decade.
OK, so Deloitte, we've spoken with them, says there's an extra $114 billion coming into the federal budget over the next 4 years. Is that money you need to rely on to roll out the programs for childcare, for the energy transition and also for skills training?
Well, we have seen in the sort of final months of the last financial year that those higher commodity prices are flowing into increased revenue into the budget. There is an expectation that some of that will continue certainly over the next year, and that is welcome. I mean, our budget is in substantial deficit. We've got $1 trillion of debt. Our interest bill on that debt is increasing in the order of billions of dollars every year with interest rates increasing. So the budget is under stress. There's no doubt about it. So extra revenue coming in is welcome. It's in the short term, it will certainly assist the budget. But the structural problems in the budget, whether it be NDIS, hospitals, aged care, defence, servicing our debt, they are the big long-term problems that we have to find room in the budget to manage. And that is a structural problem that's not, well, won't be fixed in the next week or so, but it's a much longer-term piece of work, and we're focused on that. So budget repair will have to be a part of every single budget for the foreseeable future. And is that where you get to that point that there is no, and this is what Jim Chalmers also indicated, that there is no surplus, at least in the forthcoming period, because of the impost of these measures, but then long term the fact that income might be a bit constrained as a result of any economic downturn? Yeah, that's right. I don't think any of us should expect that some of the increased revenues are going to continue at the rate that they've been coming in. I think that's a given. And secondly, we can guarantee that those spending pressures in those 5 areas that I just outlined will continue. And between those two is the structural problem in the budget. So that requires us to be constantly looking at how we're spending money. Is it quality spending? Is it driving economic growth? Is there an economic dividend? Is there areas where we can stop spending or redirect spending? And that's the work we've started to do. You'll see some of that in this budget, not all of it, because it's work that will continue. But we've had a reasonable crack at it in the last couple of months to make sure that we are, where we can, shifting money, you know, reallocating, or where we can, making genuine savings. Katy Gallagher, Finance Minister, always good to chat to you. Many thanks for your time today. Thanks so much for having me on, Ross. Well, coming up after the break, we move away from the budget. Well, sort of. Changing demographics is putting more voting power in the hands of millennials aged in their 30s and 40s. We speak with Bernard Salt about it. That's up next. Thanks for being with us here on Business Weekend. If you're aged in your 50s, your 60s or 70s, you might not realise it, but the power of numbers in your age group have shaped politics, society and superannuation for more than 30 years. But that is changing with every single passing day. The latest census shows the same number of millennials in society as there are baby boomers. Now, to work out what that means, I spoke with demographic thinker Bernard Salt.
Well, there's no doubt that the time of the coronavirus will signal, I think, it's almost like a bookend. It's signalled a shift in the structure of Australian society, with the baby boomers having reigned or dominated perhaps for the last 30 years or so, often in the workplace, certainly in politics and so forth. But from the time of the coronavirus onwards, you'll see the baby boomers actually subside and their influence wane over the 2020s and then continue to decrease. We all know where this is heading in the 2030s or so. In many ways, it's the natural way of things. One generation rises, another generation recedes, and that time where the baby boomers really start to recede, especially from the workplace, is before and after the coronavirus. And I will say also that I think that is accentuating the skills shortage at the moment, with baby boomers, teachers and nurses and other people making a decision after the coronavirus that now is the time to retire, and that is simply accentuating the skills shortage.
So Bernard, in today's society, just who are the baby boomers? What do they represent?
Well, the baby boomer generation comprises today a bit under 5 million people. They were born between 1946 and 1964, and they started to move into the retirement stage of the life cycle in 2011, and they'll be completely into the retirement demographic, if you like, by the end of the 2020s. This was the generation that really created youth culture in the 1960s. Might be a bit hard to imagine at the moment, but they were quite rebellious in their teenage years. They tried to avoid going to Vietnam. Of course, that was the great cause of the late 1960s. By the 1980s, they had settled down, they were partnering up, and they created the concept of yuppies and dinks. There was a social movement that was attached to baby boomers in the 1980s. The late 1990s, early 2000s, they were then in their 40s and 50s, and the sea change and tree change movement was very important. So at each stage of the life cycle, when they were teenagers, when they were 20-somethings, when they were 40-somethings, and now when they're 60-something, they have shaped society. And of course, over the next decade, as they move into their 70s and 80s, they're going to place extraordinary pressure on aged care, servicing and facilities. So you can't produce a generation of that scale and not shape each stage of the life cycle through which they pass. And they're going to be around for a little while yet, impacting the way we think about what we now call old age, but I think it'll become very politically incorrect to refer to someone as old by the end of the 2020s.
And what about the millennials? How will they seek to change the future?
Well, you could also argue that the 2020s is the time in which the millennial generation really find their feet. This is a generation that is now moving from their mid-30s to late 30s, early 40s. By your late 30s, you're partnered up, you have 1 or 2 kids. Your partner has gone back to into the workforce. I think that the millennials are actually moving from their inner city apartment phase of the life cycle to, in fact, middle suburbia and outer suburbia. If you have, or starting a family, if you've got kids, you kind of need 3 bedrooms, 2 bathrooms, a front yard, a backyard and a Zoom room. And it's also the time in the life cycle, late 30s, early 40s, as we will see in the 2020s, when the millennials pass through that stage of the life cycle. That's when you really start to move up the corporate ladder, and you start to create and build businesses, and you move to the stage of being senior managers, or even the managing director of a business, or the CEO of a business. You could argue that the 2020s is the millennials' time in the sun. And so, yes, they will be exercising quite a significant amount of consumer power as well. There is a theory that you never spend as much money in any year of your life as you do at the age of 42, because you've got kids and families, commitments and housing and so forth. And you've got this entire generation of millennials, 5 million people, passing through that stage of the life cycle. So household formation, home buying, home improvement would be certainly businesses to be in, and this is the time of the millennials when you think about it.
So it's clear that baby boomers have shaped their world. Contraception, technology, seeing the world. In that way, do you sense the millennials will see the world differently from their parents?
There is no doubt that the millennial generation in their 30s and into their 40s, I suspect, have a different attitude to work and life, what is important to them. Climate change, of course, very important issue. They have a very strong civic conscience, and they don't want to work for an organisation just for pay and conditions. They want to be involved in a workplace that has meaning. They want to feel that they are making a contribution to society. So I think they're very civic-minded, and there's a search for meaning in the kind of work that they are pursuing. They're also looking to shift the way workplace value is delivered, not necessarily in the workplace. And I think work from home has been, in many respects, very liberating for this generation. There's no way that a millennial in their late 30s, early 40s will want to go back to the drudgery of commuting an hour into the workplace and an hour home 5 days a week for the next 30 years of their career. They will say they're not doing that, there is a better model. And so what we're looking for from the millennials is not just this very strong civic conscience, this pursuit of meaning, if you like, but also the development of a better lifestyle, a better quality of life. And as we all know, Australia offers a wonderful quality of life, but the drudgery of the daily commute really has been addressed, or is being addressed, with work from home. The millennial generation, I suspect, will grab this concept and from the pandemic, and they will not let go. They are going to incorporate this into the Australian lifestyle going forward. And I think at the end of the day, this delivers a better quality of life for workers. I think the pursuit of meaning gives people a sense of purpose. And also, of course, their commitment to climate change, all of that also, I think, makes a great contribution to society.
And with that political power, do you also sense that millennials might try to change other things, especially around the workforce and laws and taxes around superannuation?
I do think that with the baby boomers moving into retirement, so 4.5 to 5 million baby boomers moving into retirement, we've never had that volume of people any time in history moving into retirement relative to the number of workers. Generally, if you go back 80 years or so, life expectancy in Australia was mid to late 60s, so you only have a very short retirement. These days, you could actually have, the average retirement, if you retired at 65, you could actually live for another 20 years or so, although most Australians actually tend to retire in their late 50s. So that's, 20, 25 years in retirement is a long time in retirement, and you're drawing down on superannuation and government services and in order to maintain your quality of life. The questions will come as to how we can maintain that quality of life going forward. And yes, I expect there will be many debates regarding taxation and equity and so forth across the 2020s as we manage this transition where the baby boomers move out of the workforce and into the retirement and lifestyle stage of the life cycle.
Bernard Salt, it's always good to get your insight. Many thanks for your time today.
Thanks very much, Ross.
Coming up after the break, our interview with famed Australian director Baz Luhrmann, who's talking Elvis and inspiring a generation of young creatives. It's good to be with you here on Business Weekend. Baz Luhrmann is an Australian legend, a film director, writer and producer. He's responsible for some of the most iconic Hollywood movies, Romeo and Juliet, Moulin Rouge, Strictly Ballroom, but also The Great Gatsby and most recently the biopic Elvis. These days, Luhrmann prefers to film his movies in Australia, and that means the boy from Herons Creek recognises there are other Aussies out there, maybe in small country towns, with big dreams just as he had. Steph Nash caught up with him.
We're right to talk about the pandemic. We're right to say that we now know nobody knows anything. We know that the period we all knew is now gone. And I feel really compelled to be helpful with helping people be creative. And I mean, like I was saying, you don't have to have a sign on your back that says, I'm an artist to be creative. Whether it's a mum with kids getting off to school, or like myself, a 15-year-old growing up in such an isolated place like in Herons Creek, which some people look around and go, well, it's a really ordinary place. I'll never be able to move forward in the universe. But just by looking around at ordinary things and imagining extraordinary things. And so this really simple idea came up, which is, and I'm working with the Marlowe, who's the director of the Design Museum in London, and also Domus, which is this great, design school, at this idea that people should just look around, be inspired, make something, and then on World Creativity Day, which is in April next year, news is coming about how we're going to display the end results or the output or the expressions that are made by anyone. And this is what's important, anyone being able to look around in their life and go, I saw that and I made this, or I saw that and I made this music, or I did this.
And so your latest film, Elvis, is the marvellous outcome of your fascination with the life and times of America in the 50s, 60s and 70s. What do you think specifically led you to Elvis?
Exactly. I think Elvis wasn't really a fandom biopic for me. It's just he was such, in the same way that Amadeus is really not about Mozart. It's about one artist going, I did everything right, and talent was put in that horrible guy. So it's about jealousy. I thought that the tension between Colonel Tom Parker, never Colonel, never Tom, never Parker.
You bled me dry and you still want more?
I am a promoter. That is what I do.
The great Carney, Carnival Barker, and this young kid who happens to be in one of the few white houses in the black community, who happens to be in the moment that youth is rebelling, and happens to, by default, fuse black music, country music, and his own style, and together they explode.
You're looking for trouble? You came to the right place.
Invent popular culture in the modern era and explode it to such a level that they get incinerated by it. I mean, it's truly a great classic Greek tragedy in a way. To me, it's the great American tragic opera.
You work closely on your projects with your creative partner and wife, Catherine Martin. Do you think having a strong shared vision with your team is crucial to the filmmaking process?
Well, the part of that, I mean, there's CM, and there's no doubt we are unbelievably simpatico and close, but I have other ongoing creative relationships, like whether it's Craig Pearce or people I work with in music, actors, sort of producers like Sky and things, but I also work with completely new people each project as well. But the one thing that is the lonely bit is that I have to come with a very strong sense of what it is in my mind, and I come with all my terrible scribbles and pictures and bad collages. I still stick pictures in a book. How embarrassing. But I start like that. The thing is, what I can't do is I'm not a fine artist. Like, I'm a conceptual artist, I guess. It's in my head. So I work with absolute geniuses like CM who are fine artists. You know, like she can take my stuff and she'll realize it with a team of people to the highest possible quality. Now, I'm always there at every fitting. You know, I have a lot to say about clothes, you know, and I know what tells the story, what doesn't. It's very different from, say, we were two fashion designers saying, well, look, let's make some hip clothing. You know, our own personal taste is the enemy of the project. But when you're trying to tell a drama, I have to sort of say that serves, that doesn't serve, that has dramatic ramifications, that doesn't, you know. But yeah, I like to think everybody in my team, right down to the newest and the person with the least status, are completely 100% swept up, committed to, and feel respected.
You filmed a lot of Elvis on the Gold Coast, and you filmed most of your work here in Australia. Has it been challenging, you know, producing these large-scale international blockbusters right here at home?
Actually, I filmed every single frame in the Gold Coast. And for the first time, we did almost all the post-production in the Gold Coast. It's never been done before. And I don't think it's difficult. It's actually the Goldie, which was a bit of a surprise to me because we built those studios in Sydney. I've shot one movie outside Australia, and that's Romeo and Juliet in Mexico. But the Gold Coast is a truly great filmmaking environment. It really just is, because it's kind of strangely shares a relationship with early Los Angeles, and that is, it's a holiday destination. So when you go to a place like LA that also is a holiday destination, you have all this hospo and infrastructure. Plus, you know, Queensland just got a lot of good sunlight, it's good living. And in this day and age, I mean, people went, well, how are you going to shoot Beale Street? That's an entirely African-American enclave. But we did. You know, we brought in some actors, some brilliant actors like Yola and, Alton Mason and Gary Clark Jr. and, Kelvin Harrison Jr., like brilliant actors, but the whole streets were populated from people from Brisbane. So, I don't think we're limited. I made Gatsby all in Sydney, all of it.
And would you challenge other filmmakers to have a crack at the industry here down under? I think Russell Crowe is banking on a new Hollywood in Coffs Harbour.
Australia's a good place to make a movie. I mean, I really encourage, and I know that the government is on board. We only have one tyranny, and that's distance. But when you get past the distance part of it, it's a really, really good filmmaking environment. It really just is. So, I mean, look, it doesn't take me much, to encourage filmmakers to come down and shoot there. There are a lot that are coming down. There are a lot that are working there. It is a competitive environment. People misunderstand what tax rebate is. Every territory in the world has a tax rebate. You're not paid money. It's just that you get some of your tax money back because you're bringing massive industry to the environment,
COVID has been very disruptive to your industry. Elvis clearly survived COVID. So what did you learn from the process?
Well, there's a crazy irony about it in that on the one hand, we were struck first. I was rehearsing with Tom Hanks and we were doing that scene where Elvis gets kissed by everybody at the Vegas showroom, and my first came over and said, I think Tom has that flu. And then the world woke up and went, wow, if he can get it, we can all get it. But the great irony is after the great struggle, because the film went away and I had to fight, and bravely Tom came back. If we'd have waited, we would never have come back. But he came back, and actually, of all the movies I've made, it was the one that came in on time and under budget. And I think something about realizing for everyone that it's a privilege to be making a movie made us all just be a little bit more attentive to the privilege of storytelling, creativity, filmmaking. Now, I would maintain that for all the darkness that has come with the COVID and with the pandemic, that post-pandemic, it's a brand new page. And people now realize nobody's in charge. Nobody knows anything. Anything can happen. Whatever's happening now can be taken away from you tomorrow. And it circles back to this initiative, because I think that the initiative is about someone saying, I've been handed a life, I'm stuck with this life, there's nothing I can do about it, I'll just roll into it. And that's okay, by the way, if you love your life. That's creative too.
There can be a lot of other hardships in your industry, sometimes things beyond your control. I think I read your set was impacted by the floods in Queensland. What advice do you have to other creatives who might be facing some personal or economic setbacks?
Filmmaking is a bit like a circus that's run like an army. And you have such a disparate and variety of people, from people who, wrangle ants to high-end actors to writers. Guys that blow things up, people that build bridges. It's just every kind of human being. And there's always adversity. There's always extraordinary, the movies I make, births, deaths and marriages, and quite a few births actually, but, and then there's just the adversity that you're trying to make the illusion of something. Gatsby, I'll always remember the sunny day when Leo rolls up in his yellow Duesenberg and it's all sunny.
I will tell you God's truth. God's truth about myself.
It rained. It was like La Nina, and 100-year-old trees were blown down the night before, and we were all sort of in raincoats and mud up to here. But, on screen, it looks like a sunny day, and that's what we do. So adversity, it's not the adversity, it's how you overcome it.
Baz Luhrmann, it's been wonderful speaking to you. Thanks for your time.
You take care.
And that's it for the program today. Up next is all the latest news right here on Sky News. Business Weekend returns next Sunday, but don't forget, you can keep up to date with all the latest business news with our daily program Business Now, 4:30 and 11:30 p.m. Eastern Time, and via our website skynews.com.au. You can also replay our program. Thanks for your company today. I'm Ross Greenwood. We'll see you next week.